Right. Good morning, good afternoon, good evening, everyone. It's February the 23rd, 2024. We're a couple minutes ahead of schedule. I'm just going to remove this. I'm going to bring in the calendar and let's go and refresh and get the Friday. And we can see we're waiting for Mexican news. In an hour, we'll have Canadian news, and in 3 hours, we'll have Baker news. All right, so really nothing here applies to us. All right, very, very light day as far as the calendar is concerned. So let's go take a look at the daily. When we look at the daily, we have a lower high, we have a higher low, we have an inside bar. It is inside of a doji, long tail doji. Even though it's a green mother measure bar, we still have to assume this rejection is to be, accounted for. And we can see how we went to the previous high, and we were concerned about that level yesterday. We needed a breakout of that level in order to start selling. And so we retested that level. And with this, we are ready to sell a little bit more, right? If we measure this, it's 24 pips, less than our average 3 boxes. So it's been a very, very light day over the last 16 hours. And as such, we have to start and take a look inside. Right? So now when we take a look inside, you can see why the last 16 hours have been very, very, very low key. Nothing here has happened. We haven't broken the ceiling, this red line. We haven't retested the floor. And so as far as we are concerned, we need to start highlighting the floor and that ceiling. Right? So we have to be concerned with this. We have to be concerned with this. Can you guys hear me okay? Can you type in the chat box if you can hear me? Okay, yeah. So Jordy, you gotta look after your own equipment, my friend.
Webinar online.
So yeah, moving forward, it looks as though we have found rejection from the high, from that ceiling, and it looks as though we're moving away from that level. And so we're actually heading lower, right? So if we take our boxes and we approach it from this high and we start measuring, right, you can see we've already moved away from the high a number of boxes, and we're breaking through this one box here. And so we would assume lower lows to come, right? So this white line that I have is because of what I've positioned in this morning. At the very top, right around 5:30 my time, I started to sell, and I still have yesterday's 5 or 6 trades that are still open. Right, so nothing's closed overnight, nothing opened overnight. I just opened more trades this morning. And so now with you guys here, we can start trading as a group. And I want to continue this bearishness. And so I want to build my ladder. Right? I want to find expected levels where we should find support and or resistance. Right? So I'm looking both above and below the current price, and I'm filling in the space that I created when I built or when I highlighted the floor and that ceiling, right? So I have the ceiling, I have the floor, and now I'm filling in the space in between. Right? And I'm just using my mind's eye just to see, just areas, zones, right? We're not looking about accuracy. We're just looking to figure out what might happen when we get near here. Right, I'm looking at this here, all these wicks. Right, so as we're moving away from this area, we're approaching the next rung on our ladder. And then when we get to that rung on our ladder, we have to ask ourselves, do we want to take part in this, right? So if it bounces off of here, do we want to sell that bounce, right? So for me, I want to sell green candles. And if it's just red, 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 I'm not chasing this. Right, so this is what we're working with. All right, we want to sell expensive, not cheap. And so expensive would be, a retest of the break. If you're a swing trader, that's would be a good entry for you. Right? For me, I'll sell on the way up to that retest because I would expect a retest to hold and a continuation. Okay, so we're waiting for an entry. Some of you may still have some of yesterday's trades. And that's perfectly fine. Right. I added to my yesterday trades with a pile of trades up at the top. A pile, I mean, I averaged and I brought my white line from here all the way up to there so that I could cross back under it. And now I'm in the money. Okay, so waiting for an entry. There's a green candle. All right, I just sold one. If it pushes up slightly higher, I'll be able to sell two. And if it pushes up slightly more than that, I'll sell more. All right, so that's the money that's allocated to that box. That is now my official box number one, right? I officially put a trade here for 3 pips. So that's my box number one. I'm allowed 3 to 4 more clicks in that box. Right? And it's only because I'm building a position, right? I am averaging the risk that belongs there. Trying to survive is really the key to all of this. Right? Because we don't know the future. We don't know, geopolitically what's going to happen. We don't know what they have in mind as far as, the banks and the Fed and all that stuff. We can only see what's in front of us, and because we've defined our risk.
According to Politico, Biden weighs hitting food companies on prices in the State of the Union.
Because we've defined our risk prior to the trading starting, so we already know what we're willing to do in this box. It's not a surprise when the job is delivered to you on a silver platter. You just got to do it. And if you happen to be pickled and you're presented break even, don't argue with the gods. Take break even, right? It's a reset. It's a chance to start over again, as though our mistakes have been erased. And sometimes our mistakes are not even ours. We're just still fixing something that did not work out, right? It's a probability. It's not necessarily a mistake. And so if you're given break even, take it. It's an argument we have with ourselves every time, right? Because we want a little bit more money. You didn't, in your heart of heart, you feel like you've wasted your time. for breaking even. So yeah, TGIF, thank God it's Friday. It's been a tough week. It's been a tough couple of weeks. So when we look at the big picture, what was once almost predictable has changed, right? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, all of 2024. Suddenly we're making higher lows and higher highs, higher lows and higher highs. And so a higher low right here, so push back down, making a higher low is kind of expected before we try to make an even higher high. Right, so something like this before we continue maybe to retest this. Right, we seem to be in a range. Right, so let's just see what happens after today, right? Do we close up here or do we close down here? Right? On the daily scale, we have a lot of work to do. Right? Today's only been 24 pips, half of the average, which itself has been shrinking. Right? So understanding where we are, where we should be, what may be coming our way in both directions. So we have plan A and then alternative. Nothing is scary now. It's just, a job, and we must do the job. And here I am talking, too busy to click my mouse. Oh man, I should have clicked my mouse. Oh, there you go. Maybe I can solve that. I saw a green there for a second. There you go. I see green. Okay. Don't want to give up on the good thing. Perfect. Come on, recycle some trades. And no, just closing today, preferably below break even. I'll be able to call it a day for that video from yesterday. I'm still waiting to close these trades, and that's why yesterday's video has not been posted yet. It will be if I, stay below break even on a Friday.
ECB Centino says the ECB must be open for a March cut, even if it's not likely. And inflation may temporarily be under 2% this year, and downside risks to inflation and growth have materialized.
All right, so push up, I want to sell. I'm still allowed one more. There it is. All right, we have closed 4 or 5 trades already. Let's keep that momentum going. All right, sell green. Because of our short-term approach to what's happening here, we have a lot of control over the outcome, and we're not whipped about by news events and geopolitical stuff. So ideally, when stuff like this does happen, war breaks out, you lose that day or that trade, that you lose that moment. You're not losing months before and, all of the trades that you establish for a year. You're flat mostly every day. You try to be. This is it here, right? We want to sell this. Right, so this is the top of the box. It's a green candle. There's a very high probability that it will lead a whole 9 pips in my direction. And so if it pushes back up, I'll sell it again. Right there. Right, a push in this area here would allow me to sell a little bit more. Like so. I'll just take one. All right, it's Friday. I don't want to go crazy with my money. I want to, try and preserve the week of work, not give it all back. All right. Having survived this drawdown here, here, and ultimately here, I don't really want to finish the week in a hole. $3,600. Oops, wrong button. There we go. Green candle. So let's go check out the ladder that we built and see how that's behaving. Ooh, beautiful. Right, looking left, let's find a couple more rungs on the ladder that might come in handy. All right. Any one of these levels that we're highlighting can offer the market a place to bounce, right? Because it's bounced from here before.
According to the US State Department, US and Chinese officials discussed growing military cooperation between Russia and North Korea.
Right, stuff like this. And so how much is this? 2 boxes already. There might be a push back up. Right, this is 2 standard deviations. Giving 1 back would not be out of the question. It's not something the market is not unknown for doing. Right, push up. I just want to recycle some of these trades here without going too deep. What's our dollar index looking like? So if you remember yesterday, we were playing off that 3-bar reversal. That 3-bar reversal held the last 16 hours. Support, so the close above the measure bar, the apex bar, the nadir. All right, so we closed above the nadir, the top of the nadir. That was
Taking a look at the Fear and Greed Index, 79 out of 100 equaling extreme greed, and the Crypto Fear and Greed Index, 76 out of 100 also equaling extreme greed, and taking a look at the VIX, currently down at 2.41% at 14.18.
So there we go. Ideally, this market is looking to go up. That's the dollar index. Right? When we're looking at the yields made it to 435, and we've been capped there, but we're also at support. Right? So we have to see if this will go down or if this will hold and go up, continue to go up. All right, so let's look at this daily just to give us an idea. All right, do we think there's more room to go here, considering we've been higher? All right, same thing with the dollar index. Do we think the dollar index is going up? All right, so we'll keep that in mind. We'll keep checking on this every day as we trade. All right, I tend to keep it on the 4-hour chart. And as an intraday trader, I'm usually trading, 1 or 2 candles on this particular time frame. Right? I'm not trading the entire day. And so I'm really using this as a reference. Right? The dollar index is an index. It's made up of multiple currencies. And so we have to be cautious. That's why I'm also referencing the yields. Right? The yields are a closer representation of the actual USD. Right? So here I am. I'm going to sell that. Right? That resistance area, that little green nib right there. So I have 3 open trades, and I'll put a 4th. I'm just looking for a little bit more downside. Sorry, I'm also clicking on my other computer. 3, 4, 5, 6, 8, 9, 10. Okay, beautiful. Waiting to see if we can recycle some of these babies. Two, 3, 4, 5, 6. There we are. So I'm positioning a couple of other accounts. Sorry, just give me 1 second. 760, 750, where the breakout took place a couple days ago. That would be a good, a good place to look at for a rest area. All right, so let's get ourselves positioned for a move back to here, right, in this area here, this zone there, right? If you think of this intraday, maybe on a 4-hour or maybe less, you don't need to be a genius, to see the shoulder, to see the head, and maybe to see the other shoulder. Right? It's just something to be aware of. Right? We don't typically trade these bigger patterns, but it's nice to know that there's something forming with potential behind it. Right? You can see that here also, right? Head and shoulders, or shoulder, head, shoulder. We're hoping to come back to this level here, right? In this zone down here. On a 5-minute chart, we're testing a couple of rungs on our ladder. And we have a few more to go. right? I want to sell this. I'll put click number 4 or 5 there. Right, right up here, if I can get it. There you go. All right, so I'm comfortably below my break even. I'm $22 into profit. So that includes today's trades up at the top, right there. That includes the trades that we took together as a group. And that includes the trades that are left over from yesterday as a group, right here. Let's see a resumption of this. Let's flush out some trades to the downside. If it pushes up, boxes upon boxes upon boxes, it will allow me to spread more of my risk. Try to spread it as evenly as possible. You don't want to be lopsided in your boxes. Ideally, if you are lopsided, what you've just done is created a martingale situation. And so what we do is called anti-martingale. And typically because we spread evenly. Some people see anti-martingaling as gridding or building a grid. So that's similar to what we're doing here, except the grid is built manually and built based on the opportunities we're presented with, not some, constant space or risk. Come on, come on, come on. We want to see more of the same. Everything that's been happening in the last 20 minutes or so, we want to see that extend. It is Friday. It's normal to expect, a slow drift on a Friday. Today, however, if you look at the S&P 500, if you look at the NASDAQ, if you look at, the equity markets, a lot of what's happening is still blowing steam off from the NVIDIA numbers and stuff like that. Some of that money will find its way into the currency markets. Right? So it's not just because there's no news, doesn't mean it's going to be, an 18 pip 24-hour period. It's been 18 pips for 16. Let's watch what the last 8 hours bring with us. Right. I think we've already done more work in the last, we've done more work in the last 30 minutes than the market, in the last hour and a half or so than the market has done in the last 16 hours. Right? I'm wondering, just thinking out loud, is it going to try to give us one of these things again? You've seen me draw these before. That's the kind of stuff that gets us into trouble, depending on how you're set up, how you set up your stop losses. You might have had a double top, and all of a sudden you're out of the game. You might have had a double bottom, and all of a sudden you're out of the game. Yeah, it's like Pac-Man, Mrs. Pac-Man, Mr. Just going along, chopping up everybody. All right, let's see what comes next. Do we get to recycle this? Maybe I will, right there. Yeah, the long tail stop allows us to survive a lot of what typical, you know, traders are not concerned with. Typical traders are not concerned with the unknown. They put all their might and effort in setting up the perfect trade, and then they regret it when it fails. We set up a perfect trade, and we also set up an alternative. And sometimes we set up multiple alternatives, right? So if the perfect trade does not work, we have a better outcome than a stop loss. It's this engineering the exit. Right? You're not afforded that luxury when you're swing trading unless you layer in your position, but then you're faced with first in, first out regulations, right? So you have to build these positions ultimately with a goal in mind. You can't just put one here, put one there at random. Right? You want to close what you open. This is why we have work in progress. Trying to see average bars 1.7 pips. Our target remains 3 pips. I have not changed the target in a long time. The swing trades, however, right now my swing trades are in profit over 2 boxes. I'm gonna let them run maybe 3, maybe 4 boxes. If I get 4 boxes out of these swing trades, I'll close everything down at this level down here. And I'll make that a green line so I remember to take profits. All right, so now I'm just using the boxes to measure the life that's in front of me, the facts. And I'm envisioning 1 box in the future. Green candle. I already have 5, so I gotta stop. All right, with nothing on the calendar, expect the unexpected. Yeah, the fog of war. Even the squawk box is really quiet today. Scary quiet. So those of you following along for a few weeks, a few months, you've seen pretty much a bit of everything, right? We've had good days, we've had bad days, we've had break-even days. And within the days themselves, we've had opportunities to change our bias once or twice. I typically don't do that much, but it's happened. it boils down to our top-down analysis, our conviction to that top-down analysis, and your ability to survive the unknown. And we're doing that based on a consistent behavior, not because the unknown is consistent. It's because we have discipline. Right? So, yeah, just be the best that you can be at what you do. So let's dollar index is bouncing off of support. It is heading into resistance though, so this might be limited as far as the extremes are concerned. Like coming down here might happen on Monday, right? We might also go up here on Monday. All right, deep breath, relax. All right. You can listen to music in the background. You can listen to the news in the background. Or just occupy your mind so that it's not trying to change the plan. Any kind of structural changes happening in front of us means something. And if it's not having an impact on the plan does not change. All right, so it's this market's ability to get under your skin because it's done nothing for so long, and all this while we're sitting on a good plan. Don't throw in the towel at the worst possible time. Our dollar index is coming off support. Beautiful. When we're looking at this coming off support. We are at support with the yields. Bonds are at resistance. Okay. Let's see what gold is doing. Gold is at resistance. I mean, you don't want to be selling gold, especially not on a Friday. All right, come on, let's recycle these current trades right here so we can, inch our way towards this. And we can call it a day. I suspect we'll be down here in the next 2 to 3 hours. And then by then we'll have an occasion to maybe bounce off and finish the day off of the lows. We have to find the lows first. We have to break this. There's a lot of ifs. That's what makes trading trading. Let's give us an excuse to go flat. Call it a day. call it an early weekend. That'd be awesome. Oh, sorry. Stretching. Ba-da-bum-bum-bum. Trying to see. 1, 2, 3, 4, 5. Yeah, we gotta keep an eye on this level next week. Let's close some trades. Let's recycle this stuff. We'll have had one box of work on a slow day. Yeah, when stuff like this is really slow across the board, it's like you feel it in your gut. Something is brewing. Especially, things like gold not moving for a few hours. Yeah. What's happening? Why is it not moving? And so, yeah, be on the lookout. We are typically on the lookout, but extra cautious. Little green candle. I'll take a sell right there. Watch today be my lucky day, and it just takes off to the moon. Okay, that's what we want to see. All right. Slow and steady. Over the weekend, if you have a chance to, review the week, review where the mistakes happened, and see how, we can make things better. It's already in the past, right? So there's no regret. It's just a learning experience. Take a few notes and move forward. The result is you gathered information, and that information is for you to use for the next 20 years. The winners don't give you any feedback. It's just a good trade. It's the probabilities working out for themselves. The low probabilities need to be studied. All right, so if we look at our outside range over here, we are conveniently enough now entering the lower half of the outside range, testing the lower half of the outside range, right? The bottom half here. We've spent the last 18 hours up here. Let's see if we spend the last 6 or 7 hours down here. All right. It's a matter of time. Oh, sorry, didn't mean to yawn. Right after this, I have to run to the drugstore, refill my leukemia meds, keep going. I'm having the best time of my life doing this stuff with you guys. This is a blast. Sending the elevator back down. I think it's part of the process. Transferring, the skill. It's a transferable skill. Always has been. It's not something you're born with. It's something you acquire. And so there is a method to the madness, and it's tweaked to the individual, and the tweaking is what requires experience. And so I'm just showing you what works for me, and I'm kind of hoping you're going to tweak it to make it work for you. I think it's part of the growing pains of becoming a trader. There we are. Anybody that thinks day trading involves sitting down and making money all day is delusional. Right? This is risk management. It's not money gathering. Right? You speculate. Rule number one is don't lose what you start with. It's not make as much as you can in as little time as possible. All right, so here we are. We've done a day of work in about 20 minutes, 40 minutes, sorry, plus a bunch of runners. I'm still holding on to yesterday's trades because I think they're going to close in a few minutes. In doing so, I'm going to continue to trade for 3 pips, 3 pips, 3 pips. I'm just going to continue to milk the cow since I guess the cow is willing to be milked. Yeah. Managing the risk is the part people neglect, and it's the part that requires the most, dedication. Anybody can open the trade, anybody can close the trade, it's like a mouse. But very few people can sit on their hands and come up with a plan. All right, see if we can do some more. You can hear all the bearish ticks coming through in the background. Right? It's a lower tone. And these are just not micro lots, right? It only makes that little tick noise when there's millions and billions passing through. And here we are. We just made a slightly lower low. We've just wrecked a whole bunch of people's day. Sorry. All right. People that started back here. Let's see where this is going. Let's see what comes up next. One standard deviation, right? If we just remove this, green candle at resistance. I know my job. I put 2 because I do have 5 to spend, and I'm willing to put the 3rd one, the 4th one, and the 5th one. All right, maybe this is the 3rd one if it pushes up. Sorry. Spring is in the air. It's only -4 Celsius today in the mountains. Come on, come on, come on, come on. Give me green, give me green. It's like I'm cheering for my racehorse. All right, another 15 minutes or so, 10 more minutes. And I have
So
to.
in 10 minutes time now, at the top of the hour, we see the release of the Canadian budget balance, a prior deficit of 4.01 billion Canadian dollars.
So yeah, top of the hour, I'll be running to run my own errands. Here I am clicking that 4th or 3rd, sorry. Let's click number 3. If it pushes up slightly more, into this zone up here, that'll be click number 4. Screw it, there it is, click number 4. Let's see if I can recycle these trades now. Our up draw is $37. That's $37 from the swings, and the rest is drawdown, but it's minuscule and quite manageable. Right, our drawdown is 11 pips, 13 pips. Right, so if you can take a trade right there, I'm taking number 5. I might totally be out of the box and be absolutely wrong, and this thing goes right back up again. Right, so you're doing this at your own risk, people. For all you know, I'm guiding every one of you off a cliff. Oh, I slept like a baby last night, and yet I'm super tired. Come on, come on, come on, come on, come on, come on. We so know what to do. We just have to get there and do it. Then we'll call it a day, call it a week. We have 1 week left to the month. Oh, and look at that. We're at, we made it to $5,600. Yay. Awesome. Heading in the right direction. Closing green. This has been this week. This has been the month. This was difficult right there. And this is since we opened the account. And it's now looking like we're trading in molasses. Slow, sticky. $1.9 pips per bar. We are targeting 3 pips per bar, therefore we'll have to wait more than one bar to make any kind of money. And it's even longer waiting when it goes the wrong way. All common sense stuff. The higher pitch tick, tick, tick tells us these are bullish ticks coming through. It's speak of the devil right here. Let's see how far this will go. Which rung will it stop at, right? It wouldn't be abnormal to see it go up 3 to 4 rungs, maybe at resistance, right? That's 3 to 4 boxes on average, right? All normal market behavior. And all we're trying to do is exploit normal market behavior. I'm digging my heels in. I'm still
In 5 minutes time now, at the top of the hour, we see the release of the Canadian budget balance. Prior deficit of minus 4.01 billion Canadian dollars.
Yeah, I'm a big part of that $4.01 billion. Let's see what happens here. We've retraced one standard deviation. How's that? How's that even possible? Top of the hour, we're walking into the fix. Next week should be pretty exciting, right? Last week of the month, usually we get month-end flow with the the currency markets and the positioning that has to take place, the rebalancing that brings the volatility we're looking for. So next week should be extravagant. All right, let's be cautious here. We want to see if it's gonna bounce. Or break. All right. Time is it? 3 minutes, 4 more minutes. So the plan is the same, right? We're not changing anything. We want the market to continue to go down, however many boxes it needs to go up first. We don't care. Well, 4 is the limit. Within the next 4 bullish boxes, we remain sellers. We're looking to get back preferably near 760, but probably not today. All right, anything lower will close all of our trades. Anything higher will threaten my swings, and so I'll be managing them at my break even. All right, I'm gonna let you guys go. Don't touch your stops, don't touch your targets, just let things be. If you're here for the next 2 hours or so, be careful because the volatility will wind down. All right, so it's not going to be a big splash. Just expect a low and then a slight wick at the bottom of the daily candle. And I'll see everybody Monday. Enjoy. Trade safe, everyone. I'm off to get my scripts refilled. Bye-bye.